Good morning and welcome to On the Money right here on WDBO AM 580, always streaming inside your WDBO app. This is your chance to hop on the air with some certified financial planners with the Certified Financial Group. Everybody on this show that sounds like they know what they're talking about, that's everybody but me, is a certified financial planner with the Certified Financial Group, being on the air on WDBO for over 30 years, answering the questions coming directly from the WDBO audience, our listeners, you. That is, of course, Certified Financial Group on the air, a call-in, one-of-a-kind financial advisory program here on WDBO, and they have been doing so for over 30 years. Today we got Chris Toadvine and Joe Bert. Gentlemen, how are we doing today?
Gosh, we're doing good.
Doing good.
How are you?
Doing just fine.
Yeah, glad you're back.
Yeah.
Thank you so much. I'm happy to be back. It's fun to play radio sometimes.
Well, as you said, this is a one-of-a-kind radio show because most everybody else that does financial stuff on the weekends, it's a one-hour infomercial. But we are here, Chris and I are here this morning to take calls, questions our listeners might have, decisions that they're trying to make regarding their personal finances, stocks, bonds, mutual funds, real estate, long-term health care, annuities, life insurance, reverse mortgages, all that stuff and more that Chris and I and the 15 other certified financial planners deal with day in and day out, providing retirement planning, investment management for a fee. On Saturday morning, we're here for you absolutely free. So if there's anything on your mind, things you want to know, things you've been thinking about, things you want to clear up, that's why we are here. And the good news for you is there's nobody in line. So all you have to do, pick up the phone and dial these magic numbers.
The numbers are 844-580-9326, 844-580-WDBO, or feel free to send in your question using the open mic inside the WDBO app. Maybe your neighbor heard something on the news and they wanted to sound smart and they say, hey, did you know? But you didn't know, and you want to make sure that they are right because it is your financial future they may be talking about. Leave an open mic inside the WDBO app or call in 844-580-9326 to hear the answers from the Certified Financial Group. Today's topic is gross anatomy of the global stock and bond markets. How do you compare?
Oh, anatomy, huh?
Wow.
Okay.
How's that for a provocative topic?
Let's do it.
We were just talking about clavicles and body parts, so how appropriate that the topic would have to do with anatomy. So, that's a topic today, gross anatomy of the global stock and bond markets. How do you compare? And, Joe, these things just come to me sometimes. And you know what gross anatomy is?
Gross anatomy.
Gross anatomy. That's I don't mean to, put you on the spot. But I had to look it up because I was
Gross anatomy sounds like the big anatomy.
Well, there you go.
The big picture.
That's the idea. It's the big picture. It's study of the body through things you can see, without a microscope. So that's what we're going to do today as it relates to the global stock and bond markets here, just to help our listeners maybe learn a thing or two around how large they are and what size they are. But so gross anatomy, the things you can see, without the deep dive. So as it relates to the body, that would be things like 2 lungs, one brain, 1 heart. Sometimes that could be questionable, I guess, but those body parts. And before we get going, though, Joe, we gotta introduce a word to be sure that kind of level set, make sure everyone understands the word capitalization.
Okay.
Capitalization. So we're going to talk about that a little bit.
All right.
You got a good definition of capitalization?
Well, capitalization, if you measure market cap by the size of the amount of stock that's in the hands of the public, that's the market cap of a company. That's what, capitalization is really funding. How do we capitalize this project? How do we get money into it? So capitalization has to do with money some way, shape, or form.
There you go. Perfect answer. So it's, let's just say it's the total value of all the publicly traded stock or we'll go with stock for now.
Sure.
All the publicly traded stock out there.
And you have large cap, small cap, mid cap.
Well, that's right. And so that's a good point, Joe. So that's how the market gets broken down. So based on total value, and what is, one of the companies that we hear about so much would be like Apple, first company to hit a $3 trillion market cap. So, the crazy thing is, and these numbers are through the end of last year.
Right.
But, Apple itself is larger than all of the publicly traded companies in Canada, than the UK, than Switzerland, France. So, when you think about how large some of our U.S. companies are, it's very substantial. So, that's how.
So just to be clear here, and I understand what you're saying, I want to be sure our listeners understand clearly what we're talking about.
Mm-hmm.
So when you talked about the capitalization of that company, $3 trillion,
Yeah.
what that simply means is
all of the shares of that company, so let's say Apple, for example, all of those shares outstanding that are owned by the public and owned by mutual funds, if you add up that value of all those shares, that's how much it's worth.
so when you say a company is worth $3 trillion, it's not the size of their
Revenue,
their
not the
factories or revenue or employees. It's really the value of all the stock that's held in public hands.
That's correct.
Got it.
That's correct. Which should, to some degree, reflect the value of their assets and income and all that stuff. But regardless, so yeah, that's what capitalization is. So why is this even important, Joe? Well, just to give our listeners a peek behind the veil as far as how do we think about building a portfolio. So for you, and when in the title we ask the question, how do you compare? It's important to know, how am I invested compared to the larger market? And is that how I want to be invested? Because oftentimes, Joe, you've seen it and I have too, we have folks come in, they own 10, 15, 20, 50, 100 mutual funds or different investments.
And they're diversified.
And they think they're diversified, but they all own the same stuff or virtually the same stuff. So this is our starting point for saying, okay, what does the total market look like? And then how do I want to deviate from that if I do it all, right? So the total value of all outstanding stocks in the world is $94 trillion. 94 trillion. And again, this is at the end of last year, so that might be up a couple percent by now, but 94 trillion, that's a big number.
Big number.
Big number. I was looking, how much is our U.S. debt, Joe?
36 trillion.
36 trillion and counting.
Right.
And so, you think about that in perspective, but 96 trillion, and of that 94 trillion total value of stocks, 2/3 of that is in the U.S. 2/3, so 65%, which is $61 trillion. That's a lot.
That's a lot of Jack.
That's a lot of Jack. That's a lot of money.
Yep.
And you hear about the U.S. being prosperous. There you go. That's a lot of wealth creation right there, because a lot of those companies are owned by individuals through their 401ks, through their IRAs, through just different investment accounts. So now outside, so if 2/3 of the wealth in stocks in the world is in the U.S., well, then if we have international and emerging markets, which is kind of how investment people split it out, that would mean that those two account for the other 1/3, right?
Makes sense to me.
And of that, the international developed, what we call developed, which would be, like Canada, it would be Japan, it would be a lot of Europe, those types of countries that are more developed in their legal structures and capital markets and all that stuff. That's about 23% of the total. So roughly a quarter of the world's stock value is in developed international countries. Mm-hmm. And then about 1/3 of that, so about 10, 11% is in emerging markets. So that's a breakdown.
So define emerging markets.
Emerging markets. So those, I'm glad you asked, Joe.
Well, that's why I'm here.
Because those would be, probably the one we hear the most about would be China, but also India, Malaysia, Korea, Taiwan, South Africa, Saudi Arabia. So these are countries that are just less developed in their legal structure, in their capital formation structure, really as a society in some cases. They're just coming along. And so that's where, when we look at like India, for example, over 1 billion people, that's going to be a really large investment opportunity as they seek to improve their lives across the entire country. Mm-hmm. And they consume more things. They'll buy those consumables, whether that's electricity or cars or tires or clothes, from someone, either an individual or a company, and those companies will seek to make money and be profitable, and so investors can benefit from that.
Right.
So that's how it works. So that said, I want to talk about the bond market, but I also see that we have Mary on the line, and I don't want to leave her waiting too long. So why don't we jump over to Mary, Josh, and then we'll circle back to some gross anatomy in a bit.
Of course. Thank you so much, Chris Toadvine. Joe Bert, if you want to join the conversation, lines are open at 844-580-9326, which is how Mary called in. Mary, how you doing today?
Good morning, Mary.
Hey, Mary.
Oh, good morning. Thanks for taking my call.
Sure.
So my question, I'm sorry to shift off your topic, but
Right.
I was wondering if you could give me a brief as brief as you can make it. I know it's complicated. Understanding of a reverse mortgage. Just a little background. I'm 63. I've owned my home free and clear for 6 years. I've lived here 29 years in the surrounding area in Orlando. And the other part is in May of 20, I had to file for a Chapter 7 bankruptcy because of a lot of debt that was left through a divorce. So I don't know if those are the puzzle pieces you need to know. I'm not sure if I would qualify. I don't really know a lot about it, but I do have, like a valuable house and not a lot of savings.
Okay.
So I was interested.
Well, the first thing is your past bankruptcy does not disqualify you. In fact, your credit rating really has nothing to do with your ability to get a reverse mortgage, because what you're doing is you are borrowing against your home. Unlike a credit line, which is the same thing, or a home equity line of credit, but in this case, you don't have to pay it back. And many people use a reverse mortgage with the idea to supplement their income, and that's maybe why you're considering it. So to answer your first question, you would qualify. You're of the age, and your past credit history will really not impact your ability to get the reverse mortgage. So let's talk about really the pros and cons of reverse mortgage. What do you know about it, Mary?
Just from things I had heard on the radio, I heard like if you pass away, that money does have to be paid back if you want to pass the house on to children. But that's not my main concern. Because it is about wanting income. Because I'm having a little bit of health problems, not real bad, but right now I'm having to back off my work right now a little bit. So my income is pretty low. So that's kind of my idea. I've just heard a lot about the fees, that they're really expensive. But other than that, people say they're good, they're bad, but not a lot. I'm sorry. I don't mean to be ignorant about it.
No. That's why you called in. So let's talk about the pros and cons of a reverse mortgage. First of all, as I said, you're borrowing against your home, and you don't have to pay it back. As long as that's your primary residence, you never have to pay it back. When you pass away, your survivors will sell the home and pay off the mortgage. And if the mortgage is greater than the value of the home or what they sell it for, it's non-recourse, which means they can't come after the kids or anybody that inherits the home. So number one, that's off the boards. But what you want to be careful of is that you have to have enough assets or enough income to pay your property taxes, your insurance, and maintenance on your home, because you can lose the home if you don't keep that up. And this has happened in the past. People, right, Chris? Take out.
No, absolutely, and they don't understand that, Mary. So that's that really is a key when you think about doing this. Is and you can take a lump sum, for example. You could take a stream of payments over time. So there are a number of ways to access that, but essentially you are just turning the equity in your home into cash, and then you can do with that cash whatever you want, including live on it. So you're a young lady in my book, and I think that it's something that you would want to really kind of think through and be sure that you had a measured approach over time, because you've hopefully got a lot of runway ahead of you. So you would want to consider that when you think about how much to take out and how.
Stick around after the break, Mary. This is a good subject. We'll get back to you if you can hang on until after the break. And thanks for calling.
Thank you so much, Mary. If you want to hop on the phones as well, join the conversation. We got two certified financial planners with the Certified Financial Group, Chris Toadvine and Joe Bert, available at 844-580-9326, 844-580-WDBO, or feel free to send in an open mic using your very own WDBO app. This is On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
Years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have, that's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're a certified financial group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're a certified financial group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
You know, waiting for you to call almost. You almost feel like that.
We're a certified financial group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. Your great opportunity to hop on the air, take a seat next to Joe Bert and Chris Toadvine, 2 certified financial planners with a certified financial group. Call in right now, 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. Joe, Chris, what do you say we head back to Mary where we were talking about reverse mortgages?
Let's do it, Joe.
Yeah, let's, for our listeners who may have just joined us, Mary called in. She's still on the line. Thanks for holding on, Mary. You had a question about a reverse mortgage, and you had mentioned the fact that you had to file for Chapter 7 bankruptcy not too long ago, and you were concerned whether or not you would even qualify. Well, based on your age of 63, you would qualify, and your credit history really does not affect your ability to get a reverse mortgages. With a reverse mortgage, you're doing nothing but pledging your home as collateral against a loan. And as Chris said, you can take the money out in a lump sum, you can take it out in monthly payments, or you can just set it up as a line of credit to be able to use sometime in the future. And once again, it's an effective tool, but you have to be careful, right, Chris?
Yeah, that's right, Mary. So, it's a great question. I'm sure others out there have the same question. And it's, for someone in your situation, definitely a consideration. You highlighted yourself that you've heard about fees and expenses. They're not free, and the rates on reverse mortgages tend to be higher than a conventional mortgage. So, as you know, rates are higher now than they were, 4 or 5 years ago for sure. And so I think that would be a consideration of mine if I think that interest rates are going down, and we kind of think that they will. Would you be able to hold off for a little bit in hopes of maybe getting a lower rate? But so I think that's something to be aware of. So there are costs up front. You probably want to shop around, talk to a couple people. Joe, there is required counseling, I think, some kind of HUD course or something that you have to do, which is for your benefit, Mary, because, you hear about the worst case scenarios sometimes with these types of tools. And for sure, there are some bad ones out there, but there are good ones who are looking to help folks as well. And then Tony called in during the break and just kind of made the point and asked the question, hey, if I live in the house by myself, if I was married and lost a spouse, or I'm divorced and live by myself, and say I have to go to a nursing home or whatever, I go live with a child, if you're gone out of the house for an extended period of time, say 6 to 12 months, the lender is going to force the sale of the home, and they're going to want to recapture their proceeds from the equity in the home. Then anything left would go to you or your heirs, to use however you want. So those are the high points. Mary, is that helpful?
You did mention really quickly, Joe mentioned that if I passed away, that my children or my heirs would have to pay off the mortgage. So what you're saying is what I'm borrowing becomes technically a mortgage?
Yes, it is. It is a mortgage on the property.
Okay.
But what they will sell the home, and hopefully the home, well, it really doesn't make any difference. If the home value exceeds the value of the mortgage, the home would be sold, the mortgage would be paid off, and your survivors would get what's left. But once, as I said, though, if the mortgage exceeds the value of the home, let's say that they found out your home's on a sinkhole or a nuclear waste site, then the value of the mortgage is going to be higher than the value of the home. It's non-recourse. They can't come after your survivors. So once again, but I want to caution you, Mary, here's where people get into trouble with the reverse mortgage. And this has happened in times past. They have this reverse mortgage, they suck out all the equity out of their house, and then they don't have enough income to pay the property taxes, the maintenance, and the insurance, and then you lose the house. Mm-hmm. So you want to be careful here. The amount of money that you're eligible for is a function of a couple of things. Number one, your age. The older you are, the more you're eligible for. And number two, the value of your home. And number three, the location of your home, because it goes by zip code, believe it or not. But it is a powerful tool if it's used the right way. But I want to caution you that, if you're planning on living in your home for the rest of your life, for 5 to 10 years, it could be a lifeline for you. But what I would do if you're continuing work, as you said, you slow down, really you want to build up some reserve funds, right, Chris?
Yeah, absolutely. I mean, anything you can do, Mary, sometimes I think my experience is that, you get in a pinch, you think I can't do anything, but anything you can save is going to be helpful to you down the road, to have just some cash and some liquidity. And look, we're always here to help if you need a second opinion or want to bounce a question off of us. But a very good question, and wish you all the best as you navigate forward through this decision matrix. Josh, I think we're up on a break. So, Mary, thanks again for calling. We appreciate it. Josh, take it away, bud.
Thank you so much, Mary, Joe, and Chris, for that great conversation, question, and answer. If you want to join the conversation, we got open lines for you at 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. You're listening to On the Money, where we're planning tomorrow,
today,
with the Certified Financial Group.
Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
You know, waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. This is a chance for you to hop on the air with 2 certified financial planners, Chris Toadvine and Joe Bert from the Certified Financial Group, answering your questions, helping you have a little bit better tomorrow then you might, or not a better tomorrow, but helping you plan a better tomorrow than today. If you want to call in, 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. If your question may be better suited for off-the-air purposes, they have a service for that too. Dave Balakrishnan is standing by in the office, and you can call the Certified Financial Group live right now off the air at 407-869-9800. We'll head back to Chris and Joe, and the topic of today's show is the gross anatomy of the global stock. Gentlemen?
There you go.
So
you have something to say?
Let's kind of recap for those listeners that just may have tuned in what we're talking about the first part of the show.
Well, yeah, for sure. So, we're talking about the composition of the global stock and bond market, and why is that important? And again, Joe, the reason that's important is because, it's no different than having a recipe when you go to make dinner. You're just going to go to the pantry and start pulling things out. And some people probably could do that and it would taste okay, but I wouldn't be one of them. So I would like a recipe to follow. And this, the composition of the global stock and bond market for many people in the investment world tends to be that recipe, at least a starting point. It's a template, it's a backdrop. So we can say, okay, if the U.S. stock market is 2/3 of the total value of stocks in the world, then do I think the U.S. is going to grow faster or slower than the rest of the world? And then I can tweak my allocation within my portfolio accordingly. So this composition that we're talking about today really is the foundation for a lot of practitioners in how they build and design portfolios, and for you, the listener, to think about how am I invested relative to the information that Joe and I are sharing with you this morning, so that you can determine, am I invested the way that I would want to be or should be? So that said, Joe, by way of review, little quiz. Do you remember the total market cap was the new word there, the total value of all the outstanding stocks that are publicly traded, by the way, in the world?
79 trillion?
94 trillion.
Not close.
94 trillion. So, yeah, give or take 15 trillion. You're right there. Yeah. So, that's kind of how the government thinks, right? Give or take 15 trillion. So, nonetheless, 94 trillion is the total value of stocks, publicly traded stocks in the world, and roughly 2/3 of those are in the United States, and the other 1/3 is outside the United States in what we would call international investments, and we further split that group out between international developed and emerging markets, and the developed is about 25%, and then roughly 10-11% in emerging markets. But those emerging markets represent a lot of population and probably a lot of growth in the future. So, it's one of those things you got to be mindful of.
And once again, the emerging market is China.
China's an emerging market.
And India.
Oh, by the way, India is an emerging market.
Yes.
So you look at those two alone, and that's what, 20%, 30% of the world's population?
Yeah.
Just those two alone.
So
under
those people are going to need tires and washing machines and clothes and tennis shoes and all the things that are made around the world. And if you own companies that produce that stuff, you're going to be serving that population. That's what it's all about. That's what capitalism is all about.
It really is.
Yep.
That's what it's all about.
Yep.
And so you're right, Joe. They're going to want to eat, and they're going to buy their food from somewhere unless they grow it all themselves, which there is a trend towards that. But nonetheless, so we talked about, that's the stock market. So the global U.S. stock market, about 94 trillion, roughly 2/3 of the value is in the United States, which equates to 61 trillion. And I can even tell you how many companies that is, Joe. That's 3,450 companies in the U.S. So think about that. Now, get this, developed international, again, that's about 1/4 of the total value, is $22 trillion, 6,200 companies roughly. So we said 3,400 in the U.S., 6,200 overseas. I know it's a lot of numbers, but get this, when you think of emerging markets, to your point, it's only 10-11% of the total value, but there are 10,400 companies publicly traded in emerging markets.
Right.
So there are more in the emerging markets, and that 10% sliver is more companies than the rest of the 90%.
Yeah.
That's a lot of opportunity.
Yeah.
Could be, could be.
A lot of opportunity, but also a lot of risk. And
That's right.
This is where due diligence comes in.
Yes.
This is where your fund managers have to go on the ground
Yes.
and figure out who's buying what, who's running what, how they doing, and this is an opportunity.
Having a process.
It's like coming to the United States in this 18th century, and people are doing stuff, building stuff, and you're finding the next whatever buggy whip company.
The next Ford.
The next Ford.
Henry
right.
Ford. That
Right.
guy up in Detroit's got a good idea, right?
Exactly,
So
exactly. Yep.
yeah, so that's right. So you want to know that the investment companies, and there are different philosophies on this, Joe. One is just buy everything, but there are others who say we don't want to buy unprofitable stuff. We'd rather just buy profitable stuff, and in doing so, that should give us an edge over time. And I'm inclined to agree with that in many cases. But so yeah, it's kind of back to the whole idea of a recipe. It's kind of like adding spice, right? Emerging markets is kind of like spice.
Right.
It can enhance the flavor, but if you get a little too much, you might be feeling it for days to come.
And if you wait too much, it'll kill you.
Well, it could. Yeah, that's true.
Speaking
of gross anatomy.
Speaking of kill you, I didn't know this. Have you? And this is a new operation. I'm digressing now, but Dave's Hot Chicken. Dave's Hot Chicken. Have you heard of that?
I have heard of it.
There's an article in today's Wall Street Journal. These guys started about 10 years ago with $900 in California selling chicken out of. And today they just sold the company for I don't know how many billions of dollars. And you talk about the right place, the right time, with the right concept.
Well,
Dave's
isn't
Hot
that
Chicken.
amazing?
The reason my mind drifted, I'm digressing here really bad. My mind drifted to that is because you talk about the spice, and they serve a spicy chicken that you have to sign a waiver acknowledging that this stuff will kill you.
Yeah. Okay.
So there we go. It's like investing in emerging markets. You get too much, it'll kill you.
Well, you get
It's
too
a spice.
much. So you took a long way around, but hey, we finally got there. So you brought her home safely, almost. But nonetheless, yeah, that is a remarkable story. I mean, I did not know that. I'll have to read
I didn't
it.
either. Yeah.
So,
Up on Lake Mary Boulevard, Dave's Hot Chicken.
yeah. Well, then there was one in Altamont. I don't know if it's still there. Nonetheless, meanwhile, back at the ranch, folks.
Go ahead.
So, but yeah, so that's the stock side of the equation, Joe. And the stock market is larger than the bond market across the world. Any guesses? So telling you that it's larger than the bond market, and we know that the stock market is 94 plus or minus $trillion total value. Any guesses what the bond market size might be? Less than 94.
Oh yeah. Dump the host here. Let me think. I'm going to throw a dart. 18 trillion.
No, 66, Joe.
Whoa.
66 trillion. So that's a lot of
That's
debt.
substantial.
That's a lot of debt.
Wow.
Yeah. So you think about it, it's less than the stock market, but still very, very substantial. And so 66 trillion is a total value of all the outstanding publicly traded bonds in the world. So now we said on the stock side that
Does that include, that's corporate, municipal? How about
that is
how about government?
That's definitely government and agency backed.
Got it.
Things like mortgage backed bonds and that sort of thing.
Okay.
So $66 trillion, and stocks are 94. So the bond market is not as big. Now, we said that in the stock market, U.S. stocks are roughly 2/3 of the total stock value in the world. Any guesses on the bond breakdown? So U.S. versus developed versus emerging markets. What do you think? And I know I'm putting you on the spot.
That's
here.
okay.
It's kind of not fair, but in the U.S., just to keep it interesting.
So let's think. How much is domestic and how much is foreign?
I will tell you it's lower than stocks.
Yeah.
It's lower than stocks, percentage-wise and dollar-wise.
All right, tell me.
Okay, it's 41% of the total outstanding bonds are in the U.S.
I was going to guess more, but 41%.
41 per, yeah, I know, you would think, right?
Yep.
So, but, you think about overseas, they borrow a lot of money. They've got some issues there. Remember the pigs from years gone by?
Oh, yeah.
Portugal, what was it? Italy, Greece, Spain.
Yep.
So nonetheless, but in the total bonds value around the world, 66 trillion, about 41% of that in the U.S. And again, we split out the rest of the world between developed and emerging. Also, around 43% in developed international. So when you think of, Canada and Japan, there's a lot of that in the UK and France and Switzerland, Germany. these countries collectively have 43% of the outstanding. Now, if we looked at, their debt in the U.S., the value of our stocks is greater than the value of the debt that we have.
Mm-hmm.
I don't think that's true in many countries.
You're probably not.
So, and then just to round it out on the bond side, 15% of the total debt or bonds in the world are in emerging markets. That's about $10 trillion. So, so that's that would be the breakdown. So you go, okay, if I were investing in what we'll call the market portfolio, I would have 60% of my fixed income exposure, my bond allocation would be outside the U.S. We don't do that. Right? We don't do that. And most advisors don't, although this year probably would have been a good thing because the weakening dollar has, helped international investments. But regardless, so again, this is a starting point. And as we look to build portfolios, this is kind of the starting benchmark. And then we say, okay, what is, do we want to invest in emerging markets bonds, for example? That's also a, we'll call it a high risk proposition.
Sure.
So,
but it's a space.
It's
the space, right?
And it can help.
Right.
It can help. So I'll share with you.
And there's some negative correlation in that too, which is also valuable.
Well, Joe, what in the world do you mean by correlation?
Well, correlation means one thing follows another, but negative correlation means that one's going up, the other one's going down, and vice versa.
That's right. So I thought market capitalization was going to be the only monosyllabic word we use today, but now you're throwing out another one. Correlation, yeah. So ideally, when you build a portfolio, you don't want everything to move together, right? So moving in opposite direction would be called negative correlation. So, and you're right, Joe. I mean, that's kind of the whole idea behind being diversified. And you know what? We've seen that work this year. We have seen it work because bonds have certainly held their own and positive returns year to date on the whole. And international stocks have really done well.
Definitely.
Emerging markets. So here's something that I thought was also kind of interesting. When we think about bonds, I mean, we could really nerd out and break down, U.S., how much is government versus corporate and securitized or mortgage-backed type bonds. But over the last 20 years, U.S. government-issued bonds, so this is in the U.S., have increased from about 25% of the bond market to about 50% today in the U.S. So in other words, half of the bonds outstanding in the U.S. are U.S. Treasuries.
Wow.
Isn't that something?
Yeah.
And it's doubled in the last 20 years.
I can believe that.
So everyone who hears this, call your congressman, tell him balance the budget. Joe laughs, and that's how we all sort of feel. It's we don't have any expectation it'll happen. But nonetheless, you can keep borrowing money. As long as you can print money, you can keep borrowing it, I guess, right?
Well, that's one of the fortunate things, at least we've had to this point. We've been able to do that, but you wonder how long that'll continue to go. But, they talk about will the dollar always be the reserve currency? When you look at it, what else is going to be out there?
Well, that's right. Today, I think when you look at it today, Joe, that's a fact. Yeah. What else is there really to compete? And there's a book that I've not read that came out just this summer recently that talks about the U.S. dollar and the idea. It's written by, I think, a Harvard, economics professor or something, but is that, the U.S. won't go bankrupt as long as we can print money, but what it will do is it will cause inflation long term. Right. And so
therein lies the challenge.
Therein lies the challenge. Yep. Because I was talking with one of the other planners in the office here last evening, and he had met with some folks who had, lived overseas and experienced inflation of, something like 35%, a month or a year or something just crazy. You can't even hardly get your mind around it. Right. But folks who have lived under that realize how devastating that can be to the society, really. So, Josh, I think we're up on a break, so take it away, my friend.
You consider it taken. If you want to call in, 844-580-9326 as Don Henley joins us. You're joining me on the outro, 844-580-WDBO, or send in your open mic using the free WDBO app. Again, we have Dave Balakrishnan standing by off the air. If you want to get right to the source, maybe your question is of sensitive nature, and you want to just call in and, use exact numbers and such, that number, Dave is available at 8407-869-3739. 9800. That's 407-869-9800. You're listening to On the Money, where we're planning tomorrow
Today.
with the Certified Financial.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have, that's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. If you want to join the conversation, the on-air portion is nearly at its close, but they do have Dave Balakrishnan standing by off the air as the show closes, and he is available at 407-869-9800. 407-869-9800. Just tell him you were listening to the show and had a question for Dave. If you have Ruby texting in, and Ruby's got a question. We do have Joe Bert and Chris Toadvine, two certified financial planners. And gentlemen, Ruby wants to know, how much can I give to charity from my IRA this year? And do I report this to the IRA for next year?
To the IRA or maybe the IRS next year?
You're right.
So, yeah. Joe, you want to take that one?
How much? I'm sorry.
How much? Ruby's asking, how much can I give to charity from IRA this year? The simple answer there, Ruby, is you get $108,000
out of your QCD.
Up to $108,000, right? As a QCD to charity, and just quickly by way of review for our listeners, that is a great way to give to charity. You know, for those who are over 70 and a half, you can give directly from your IRA. You don't have to pay income tax on it. And the charity doesn't either, so it's a beautiful thing. So you stick it to the tax man and avoid taxes completely on those funds. So up to $108,000, and do your report? Yes. Next year, let's just say hypothetically, someone had to take a $20,000 required minimum distribution. They gave 10 to charity. They would only have to pick up $10,000 as taxable income. And Joe, I also heard recently that starting this tax year, 2025, the custodians, so that's going to be Fidelity, Charles Schwab, whoever you use, will have to report QCDs on the 1099. So there's a separate code for those QCDs. So that's something new that's coming, and that will hopefully help a lot of folks who have been employing this strategy, because some folks forget to tell their tax person, they end up paying tax on money they shouldn't.
For sure.
Yeah.
Well, I just want to let our listeners know that we're firing up our workshops again coming June 28th, 3 weeks from today. Gary Abley will be holding a workshop, Will Your Savings Last a Lifetime, from 10 to noon right here at our offices in Altamont Springs, our Learning Center. If you want more information about that, go to our website. That's financialgroup.com. That's financialgroup.com. You can make your reservation right there. It fills up fast, but we hope to see you here in 3 weeks. Will your savings last a lifetime? And thank you for hosting. Josh, welcome me back to you, my friend.
Thank you so much. I'm happy to be back. Happy to be talking to Joe and Chris and all the team there at Certified Financial Group. If you want to call in right now, Dave Balakrishnan standing by to answer your calls as this episode of On the Money comes to a close. Dave can be reached at 407-869-9800. You just listen to On the Money, where we're planning tomorrow with the Certified Financial Group.